Hey everybody, I'm Norris. It's Friday the 13th, and this is the Norris Group's Real Estate Headline Roundup in 2. Sorry I've been missing in action. Happy Valentines Day a day early. We have been so busy putting together events like our 2015 Proceed with Caution. The report is now online if you missed it and you still want all the information. Check out thenorrisgroup.com. The S&P has settled a $125 million lawsuit with CalPERS to resolve inflated AAA ratings that the S&P gave to mortgage-backed securities back during the bust. Fitch has already settled and Moody's is still on the docket to be sued by CalPERS. In addition, S&P settled a $1.37 billion suit with the Department of Justice for giving top ratings to poor quality securities, and the suit will resolve not just the suit with DC, but also 19 state attorney generals. The CFPB is taking action against 3 mortgage lenders they claim misled consumers that their companies had federal authority. I'm sure you've heard those out on the radio show. That makes it sound awfully convenient that they're very close to the feds, but it's going to be interesting to see the CFPB and how much they crack down on advertising, specifically when it comes to lenders, and it seems like they're going after lenders that do reverse mortgages. A new California bill clarifies that widows and heirs with interest to a property have the same legal rights as homeowners under the Homeowners Bill of Rights that was passed back in 2013. Survivors often run into delays, red tape, and of course obstacles when trying to work with banks after a death, as some are dealing not just with grief, but loss of income after death, so they can't qualify to assume the loan and so on. So AB 244 will force banks to consider things like loan modifications and easier assumptions. Foreclosures are at its highest in 2 years in SoCal, according to Realty Track. Banks have finally adjusted to the California Homeowners Bill of Rights and are moving forward on foreclosures that probably should have happened about 2 years ago. We're hearing from appraisers, realtors, and lenders that activity buying is up, so let's get the market moving in 2015, people. A recent study posted on the National Association of Home Builders showed 90% of those born from 80 to 84 moved out by 27, but 50% of them boomerang back with mom and dad. Those with bachelor's degrees or parents in higher income brackets were more likely to boomerang home. Builders are keeping a sharp eye on this group and holding out hopes that they will hop off the fence in the next few years and buy homes. That's it for the headlines, but of course we've got many more on the norrisgroup.com/blog. Up on the radio show and podcast this week, we've got Rick Solis. He is, of course, our appraiser extraordinaire, talking about trends in the appraising worlds moving into 2015. We'll be back doing speaking engagements starting the 19th. Discover how to create a $100,000 payday per deal in 2015 with the Apartment Owners Association in San Diego. On the 21st next weekend, we're going to be doing our first annual T&G subscriber brunch. If you subscribe to our subscription, all of our information online, our entire body of how-to work for just $350 a year. You'll definitely want to check that out, and there's a low-cost brunch that comes with that every year. We're doing it in Temecula up on the 21st. Check that out. I'll send an email out probably on Tuesday about that. Again, February 24th, how to create $100,000 per deal. We're going to be doing in Anaheim. March 11th, we're going to be up in Sacramento with NorCal RIA, and on March 12th, we'll be back in Orange County with OC RIA doing the same talk. So for more information about all of our hard money lending programs, buy and flip, fix and hold, and new construction, check out thenorrisgroup.com. Or for more information about passive investing with trust deeds, check out tngtrustdeeds.com. With that, have a fantastic Valentine's Day weekend, and we'll see you next week.